Pankaj spoke to the management. Pankaj, what did you start asking?
Well, Anand, the key problem when the numbers came out was the wage hike that was slightly on the higher side. So I started by asking that what essentially was the wage hike for, and was it a bonus payment that was a one-time sort of a payment? Let's listen in.
Yes, we have given wage revision to our employees. In the first quarter, there is a payment of 20 crores to the employees on that basis. If the company is doing so well, the employees also should get their share, no?
Right. So, ma'am, it will be a one-time sort of an impact and then it will go ahead and neutralize on its own?
One-time cost. Yeah.
Right. Let's talk about the business overall. So, the loan growth was good. It was broadly in line. Can you just tell us the trend and the sort of demand that we are seeing?
The growth in loan book was 15.35 or 85, something like that, around 15 to 16%. And it was a very good growth in all the regions and all across the country. So, there's a lot of good pickup across the country, and especially the growth, this pickup and the traction has been led by southern and western region. And we have now also seen some good demand coming up for project loans also. So I think across the country now good pickup is there as far as housing loans and the project loans are concerned.
Right, ma'am. Two important segments. One would be loan against property, LAP, and second would be individual loans. What was the growth in these different segments?
Yes, it did. I think it grew more than 14%, and even LAP also grew at a good percentage.
Right. Can you talk about the non-core loans as well? I can see it is a very small part of your portfolio, but it grew by greater than 90 to 100% on a YOY basis?
No, actually, we have been looking at those cases. A lot of marketing was done last year for those cases. So because of that, the marketing teams across the country were quite, wired on this non-core business. And it's a high yielding product. Because of that, a lot of good growth has taken place, and it also helped us to improve our net interest margins.
Right. Apart from that, if I look at the numbers, the provisioning was particularly very high. Any reason? Was there a one-time sort of a number in it?
The provisioning is done for this quarter. It is a one of 92 crores. That is a one-off. Provisioning of 92 crores is a one-off kind of expense or provisioning. It has happened because of the bucket change for two developer loans, which became NPA 3 years back. Now, since they have become NPA 3 years back, because of the aging of NPAs, the compliance issues that we need to now provide for them for 100%. So now, in fact, we needn't worry about those NPAs at all, because they have been provided for 100%, one thing, and secondly, no, whatever has to happen, those NPAs will be gain only, because the recovery process is already on.
Right, ma'am. So can you just confirm for us that provisioning going ahead will be normal, or what essentially was happening earlier?
No. Yes, gross NPA ratio is 0.59. It has improved from 0.60 last year, this quarter.
Right. Prepayment rate increased quite a bit. That was a problem for the entire H2 16. Can you just tell us that what essentially are the numbers there?
No, prepayment rate we studied, it is basically because of the normal repayments. Because the base increases during this quarter, maybe normal repayments have taken place, normal EMI repayments. So because of that, the prepayment looks, it looks like as if it is more, but it is good. I feel it is under control.
Right. Net interest margins were higher. Do you continue to see the benefits of lower cost in the system?
The cost of borrowing has come down because of 2-3 reasons. One is the outside market. We are able to get funds at lower rates, so that cost has come down. Second is we have done rejig within our borrowing portfolio liability mix, and because of that also it has helped us to reduce our borrowing cost.
Right. As far as cost of borrowing is concerned, do you see it coming down further? Yields have gone down further from the June level. Do you believe that that number will keep aiding your net interest margins?
Yeah, I think I expect a little more improvement in cost of borrowing, And further, that is what is market help in cost of borrowing. We are also working on our, within the company also some liability remix is being done, liability mix is getting changed. That also helps us in improving our borrowing cost.
Right, ma'am. Just a word on outlook for FY17. I know you cannot give a guidance sort of a number for PAT or NII, but any view on the loan book? What is the target that we are looking at?
Individual should drive it. We are targeting more than 15% growth in the individual segment, and that is what is our focus for driving the growth for the year.